Hello and welcome to the Daily Finance Wrap, your daily dose of personal finance updates covering investments, insurance, real estate, loans, and everything else about your money. We would love to talk to you, so please keep writing to us with your questions and queries on this YouTube Live. I'm Samina Nalwal, and the top news stories of the day are: first, up to market action. Bulls failed to defend 24,800 in trade today on weak global cues and a mixed bag of earnings. The Nifty declined 112 points. The biggest losers of the Nifty included Tata Consumer Products on weak earnings, Kotak Mahindra Bank, BPCL, IndusInd Bank, and Bajaj Finserv. On the other hand, HDFC continued to get rewarded on back of strong earnings. Bajaj Auto, Asian Paints, M&M, and Eicher Motors supported the Nifty. All sectoral indices except for the auto sector ended in the red, with FMCG continuing its decline. Metals, cap goods, power, real estate, IT, oil and gas dropped in the range of 1 to 3%. Next up, mid cap and small cap mutual funds have still been popular amongst investors. That's what a study from AMFI indicates. Mutual funds in the small and mid cap space have attracted inflows to the tune of 30,350 crores, as per data from the Association of Mutual Funds in India. These funds received a total of 32,924 crores. Despite the regulator SEBI expressing concerns about the high inflows into these funds, experts still believe that investors will continue to choosing them for better returns in the medium term. The Employees Provident Fund Organization, or EPFO, has announced an extension of the enhanced life insurance coverage under the Employees Deposit Linked Insurance, or EDLI scheme. Labour Minister Mansukh Mandavia said that the increased insurance benefits will continue, providing life cover of up to Rs 7 lakhs for more than 6 crore EPFO members. All EPFO members are covered under this, including those who frequently change jobs. Employers will also see significant updates in the Employees State Insurance Corporation guidelines to improve worker welfare. ESIC provides medical benefits, cash assistance during sickness, and maternity leave for eligible employees. And the Big Bang listing will hit the markets tomorrow. The Hyundai IPO rose 5% in the grey market premium as opposed to an earlier dip of 3%. The increase in the grey market premium indicates an improvement in investor sentiment ahead of the listing. Hyundai shares traded at around 2,000 rupees in the grey market. Remember, the Hyundai Motor IPO was India's largest IPO to hit the streets and was oversubscribed 2.37 times. The 27,870 crore IPO is a complete offer for sale. And keeping with the theme of IPOs and whether or not you should be subscribing to two new listings or subscriptions that opened today, and of course, more importantly, what should you do if you're an investor who was lucky enough to get their hands on the Hyundai IPO? We have with us Astha Jain, Senior Research Analyst at Hem Securities, who joins in. Astha, hi. We've spoken a bunch of times in the past, and you've tracked the primary markets for over a decade. I want to start with a very interesting opening subscription today, which is Vari Energies. Vari Energies, I believe, has been offered to retail investors in the subscription phase at a huge discount to its unlisted price. What do you recommend investors to do?
Hi, good afternoon. Good evening. Talking about Vari Energies, first of all, it is the largest manufacturer of solar PV modules, as we all know, and they have a strong installed capacity of around 12 gigawatts. Now, as you are saying that it is getting a very strong response, definitely there are two, three factors behind it. First of all, the kind of the IPO valuation this company has done, it is looking to be very reasonable. They are coming out at a price to earning multiple of around 27, at higher end of the price band of around 1,503 rupees. So the pricing is very attractive at this case. Talking about the other factors, the industry tailwind is very strong for this company. They are into the manufacturing of solar PV modules, and we all know the government has a strong focus on this. And in fact, in upcoming days, we can see more PLI towards this sector. So definitely the strong focus of the government industry tailwind is strong, and a company is getting huge demand because the order book in the terms of megawatt is quite good. So looking after all these factors, and in fact, their financial performance is also very strong. So looking after all these factors, we are finding this IPO to be very attractive IPO, recommending to subscribe at the upper end of the price band, and we are recommending it for the listing gain purpose as well as long term purpose, because what we feel that the immediate counterpart, which is Premier Energy, which got listed a month back only, now it is trading at a high price to earning multiple of around 50 or so. So looking after the price to earning multiple of this counter, I think it is a huge scope for the upward rally, and that's why we are recommending it to subscribe for the listing gain purpose as well as long term purpose.
Asta, let's break this down, right? So it does come at a deep discount to its unlisted price. Its listed peer, Premier Energies, is trading at a huge premium, which again makes this very attractive. But take a few steps back for me. What do you think investors were thinking? Because the anchor book as well was very well subscribed by some very marquee names. Financials have been convincing and promising enough about the future of Vari Energies, you think?
Yes, and one important point is that when Premier Energies came, it was at a higher end of the price band of rupees 450 when it came. It was at a price to earning multiple of 24 when the shares were not listed. And afterwards, what we have seen from 450, it rose to around 1200 odd levels. Right now, it is trading at 1042. So at 1042, now the price to earning multiple is coming at more than 50x. So looking after the kind of response Premier Energies have got, I think Vari Energy is well placed to cater a very strong premium. It is a bigger company than Premier Energy, because if we talk about the installed capacity of Vari, it is 12 gigawatt, while in case of Premier Energies, it is 3 to 4 gigawatt. So in terms of revenue, in terms of bottom line, it is just double. Vari Energies does just double of Premier Energies. So if I compare these two companies also, then Vari Energy is much ahead. And in such a case, definitely it will gain attraction. American BFC, a very strong order book. So looking after all these, I think it will garner very strong premium, and we are recommending to subscribe it not only for the listing gate, but what we are expecting in upcoming deadline will definitely be a beneficial to our strong infrastructure setup already. So whatever PLI that will be announcing by the government in coming days, I think Bali Energy is well poised to cater those opportunities. And hence, I think in the long term also, this can be one of the portfolio stock and can yield strong returns. So subscribe it for listing long term.
Asta, I think we're struggling with your audio. So while you fix that, I'll just quickly take our viewers through more about Vari Energies. Remember, Vari Energies plays in a field that is solar energy. 20% of the Indian solar energy comes from Vari, which means you own 20% of the Indian market share. Also, with the growing demand that we are seeing for solar energy locally and globally, puts Vari Energies in a very sweet spot. It's a fairly large IPO. In fact, it's to the tune of 4,312 crores. They've already raised 1,277 crores from anchor investors. And the anchor investors that came into this subscription were the likes of a Nomura, a BlackRock, Mirai Asset, leading Lighthouse Fund, which is a venture capital. So very solid hands have come into Vari Energies. What you also want to remember is the price band that's offered to the retail investors comes at a deep discount to its unlisted price, which also means that the grey market premium on Vari Energies is at 100% in terms of listing gains. The company will list on the 28th of October. Coming back to your, I believe you would have hopefully fixed your audio, Astha. Any sort of key risk that one needs to be mindful of while they subscribe to Vari Energies?
So I think as such, from the IPO perspective, there's no major risk. Yes, but as we all know that any company, when they come out with the IPO, they need to mention certain risks. So looking after from the RHP, the only risk which I feel is the concentration of the revenue, as the top 5 or top 10 customers are having major part of the revenue. So that can be one of the risks from the company perspective or from the business perspective. Otherwise, from the IPO perspective, I don't think there is any kind of risk. In fact, I want to draw your attention towards one point that in the retail space, since it is a big IPO, so definitely the number of shares that come for the application is large, and that's why there is a good opportunity for the retail investors to get the allotment in. Because in the retail category, the size is at around 1 crore shares. So I think looking after
Right.
the size of the IPO also, it is a good opportunity for the retail investors to put their money into it, because chances of allotment can be better as it is a big size IPO of around 4,000 or 4,500 crores.
So, Asa, let me flip this for you. If a retail investor is interested and you think this is a good portfolio stock but doesn't get an allocation in the IPO, would you still recommend it on listing? I know it is trading at 100% premium on the gray market. So, if you do get an opening on the 20th of October at 100%, what does an investor do in terms of listing gains? And what does an investor do who hasn't got an allocation? Should they still go out and buy it 100% more expensive on the 28th?
So while talking to you, I am just calculating, and I think at the 100% premium which you are talking about, the price to earning multiple comes to be at around 50x. Right now, they are coming at around 26 or 27 times at the price to earning multiple. But after having such sort of premium, which you are saying, the price to earning multiple turned to be around 50x. So I think 50x is a very, very strong number. So I think, and on the day of the listing, investors should wait in case if they will not get the allotment, then they should wait for some fall in the issue. I mean, in the issue price, I mean, in the price at which it will get listing. So I
Okay.
think investors should wait and then they should make the decision, because if it will get listed at 100% premium, then price to earning multiple will be at around 50 times. I think at that time it will be little stretched. So on the very day of the listing, please wait for some time. Let the price settle on its own and then make a decision. This is what we are recommending.
Right. So a very good possibility that Vari Energies gets a listing which is at 100% premium to its subscription price, which is close to 1565 on 1500. So closing an opening around 3600 is what we're expecting on Vari Energies. So if you're lucky and you get your hands onto it, it may be a good investment even if it's just for listing gains. Asta also believes it's a great stock to hold in your long-term portfolio. So one way or the other, you should hope for the best on this one. The other one, Asta, is a relatively smaller IPO that's opened for subscription today, and that's Deepak Builders. Now, this is a 260 crore IPO. It's an EPC player with a big sort of geographical concentration in Punjab, I believe. What are your thoughts on Deepak Builders? Do you recommend retail investors to subscribe to this IPO?
Yes, we are recommending this IPO also. Subscribe it for the listing year as well as long-term perspective. Now, talking about Deepak Builders, they are into the construction and engineering activities, especially they are into the construction of administrative buildings, hospitals, etc. What is the major attraction of this IPO is its order book. The order book is very strong, and book to bill ratio is coming at around 2.7 times. So whatever revenue they have posted in FY24, the order book is just around 2.7 times more than that revenue. So that itself shows the revenue visibility for this company, at least for coming 1 year or a 2 year. In that case, if a revenue visibility is there, the growth is there, investors are always attracted to such kind of stories. And that is why we are positive on this counter. In fact, if I have just talk about the CAGR growth also in case of the top line, bottom line, they have shown strong CAGR growth in the top line, bottom line as compared to their peers. So, and they're coming at a price to earning multiple of around 17x. So, looking after all these factors, we are recommending it to subscribe for listing gain as well as long term perspective. But here, there is one disappointment is that the size is very small. So, I think around 44
Hmm.
lakh shares are only reserved for retail category in the case of this IPO. So, the number of shares which are coming for application are very less. So in that case, allotment will be tough.
So you got to be very, very lucky in that case. But Asta, what stood out for me for Deepak Builders is the fact that 30%, or rather a large part of their business comes from Punjab. 33%, I believe, of the projects they pick up are based in Punjab. And also, their whole order book is government backed, which
Right.
makes me a little concerned. Are you worried about that, or you don't think this one needs to be too concerned about this?
No, that can be one of the concern. You are very right on that part because the regional concentration is there. So geographical risk will always be there. If something, some unrest or something, that sort of event happened in Punjab, then definitely it can affect the prospects of the company. And in fact, dependency on the government project is also one of the concern. But what my view is that these are the concerns when any state goes into the election, etc. So in the near term, I don't think these are to be as major concern. And in the near term, what is attractive about this IPO is its order book of around 1100 crore, I suppose 1100 to 1300 crore. So I think that is quite attractive. It is 1380 crore to be very precise, while the FY24 revenue is at around 511 crore. So if I talk about revenue book to bill ratio, it is 2.7x. So it is already giving a strong revenue visibility. These are concerns, but in the near term, I don't think that these concerns will play an important role. And hence, I think one can subscribe to this IPO as well.
Right, Asta. So you clearly have a subscribe on this too. It is small, so you got to be extremely lucky to get an allocation, Deepak Builders. Apart from that, interestingly, Asta, this one is also trading at a pretty significant premium in the grey market. So assuming that one gets an allocation in the IPO, should they exit the stock if it comes in with a 30-40% premium on listing day, or should they continue to hold it?
I think on listing day, if it trades at a premium of more than 30-40%, then definitely one should book some profits because ultimately there are certain other things which are associated with this issue is that the regional concentration, which we have already talked, although this is can be one of the major concern. So I think at a 30-40% premium and the price to earning valuation will also become higher in that case. So I think if it is available at a 40% or a 50% premium on the listing day, then we definitely recommend to book partial profit or three-fourth of the quantity.
And the fact also remains that this is not only player in the industry, right? So there are lots
Right.
of players in the listed space that do similar work to Deepak Builders. Very quickly, just to recap, in terms of valuations, you're comfortable with the valuation of Deepak Builders? You feel like it's a good play?
Yes, in terms of valuation, I think the valuations are okay. Not very cheap, but not very expensive too.
Okay.
So in that case, we are comfortable with the valuation at 17x.
Astha, I want to get your pecking order. So I'll do that towards the close of the show. But how can I not talk to you about Hyundai? I think there's been enough and more conversation around this. You've spoken to a lot of viewers about what your thoughts have been on Hyundai. The IPO, which is the largest a country has seen, was well subscribed. 2.37 times is what it was oversubscribed by. Of course, the complete IPO is an OFS, which largely means the money goes back to the promoters in Korea. Uh, but also, what has been surprising is how the gray market pricing has been moving from a discount to a premium. It was down about 3% yesterday. This morning, it was trading at a marginal uptick of about 3 to 4%. What is it that you're expecting on Hyundai's listing tomorrow? Let's start with that first.
So talking about Hyundai listing, we are expecting the listing to be the issue will get listed at around the issue price only. This is what we believe. I hope I'm okay with the sound now. There was some
Yes, yes, you
internet
are okay on the
interruptions, and I
sound.
really
You're
apologize on that part. So, is my sound reaching you? Okay.
uh,
Yes. So, talking about Hyundai, what we believe that it will list at around the issue price, since what we have seen, the demand was not that high. The issue subscribed 2.5, 2.7 times, but they got the demand from a good institutional investors. If I talk about the anchor book and big funds, which is like world level funds like Fidelity, BlackRock. These funds have also invested in the Hyundai because it is a big brand name at global level. It is a number three passenger vehicle company, and in India it is number two. So everyone, every portfolio manager at the global level, if they want to keep some auto in their portfolios, definitely they can look after this. And India being a good growth story for them, so Hyundai India in that case will be a great interest to them, and it was a great interest to them looking after the anchor book. But here, only one point which I was concerned about, and that is why we were also not recommending it for the listing gain purpose, was that the valuation which they have done, it was a fully priced IPO at around 1960 odd level, the price to earning multiple, which is coming at more than around 2025. It was a fully priced IPO, and they have left nothing for the investor on the table. So that was major concerning point. And second point was the industry tailwind is not that strong, because looking after in the last few months, the auto numbers which are coming are not great. And third point is about the Indian market. Indian capital markets are also not in the good shape right now. And in fact, their immediate pure Maruti, even it has corrected a lot. So in that ways, we were not very much convinced for the listing gain perspective, and that's why we have not recommended it. So in fact, my idea is that tomorrow also it will list at around the issue price, and it all depends on the market conditions as well. So we are thinking it to list at around issue price, maybe premium, maybe discount, but not a high premium and not a more discount. This is what we believe, because now those who have subscribed, they are good hands, they are very strong hands, and they will not come to sell on the listing day. This is what I believe. So in that way, it will be maintained at around issue price. This is what my belief is.
You're right, because anchor investors won't be able to exit the IPO any which ways on listing day. And between the subscription opening to the listing, peers like Maruti have also corrected significantly. So now, of course, the competition is between a Hyundai, a Maruti, and M&M, which is at a big premium, I understand. But the opportunity for growth on M&M is also significant. Assuming we get a start at 1960 to 2000, if that is the range that the stock lists at tomorrow at 10 a.m., what should investors who've got allocated the Hyundai shares do tomorrow? Should they hold on to it or take whatever they get off the table?
So in case if the horizon is really short term, because this is I'm talking about the retail investor, I think that QIB, because it was barely subscribed in the retail category 0.5 times, even in the HNI category is also not subscribed to its fullest. So what I believe that those who come for selling will be retail investors mainly, or HNI, because I don't think that in the QIB book or the QIB investors will come for the listing gain perspective. So I think in that way, if it is a short-term horizon, then one can book partial profit. In case if it will list at premium, but in case if it will list at discount, then keep it in the portfolio. Wait for 6 to 8 months. I think within 6 to 8 months, the stock can deliver returns on the upper side also. So my
Hmm.
idea here is, in case if it lists at discount, wait for 6 to 8 months, but keep it in the portfolio. And in case if it will list at around 2000, which is a slight premium to the issue price, then I think booking partial profit in case if a horizon is short term is always recommended.
I'm just going to throw a curveball at you, right? Tomorrow, if you get Hyundai at 1960 and Maruti around the price band that it trades at, what do you recommend investors to do? Because the pool of money is limited, right? You can't, as much as we want to own everything, you can't really over diversify your portfolio because that's never going to help you generate any alpha. What would you pick? Maruti at the current valuation versus Hyundai valuation at 1960. Where would the bias be? Fresh money is to come in tomorrow.
So here, one point we really need to see the new product launches. Now that will carry the key. If new product launches, if we talk about Maruti and Hyundai, in both the cases, whoever will launch more new products, especially in the EV category, because I think in the EV category, Hyundai really carries an edge, especially their SUV portfolio is quite high in their total portfolio. So it all depends how the new product they will launch, how many number of new product they launch, etc. But just at the market price, nothing, I'm not keeping any other point in the mind. I think Maruti is a better candidate at this moment of a time. But 4 5 months down the line or 1 year down the line, if any one of them who will launch more product, definitely will be in a better position.
Right. I'm going to do a quick rapid fire with you. Vari Energies versus Premier Energies. Even if Vari, of course, let's talk about subscriptions. So, Vari Energies versus Premier Energies. Where are you putting your money?
Vari Energies, even if it will list at a huge premium.
And this is for listing gains and long term portfolio holding.
Yes, for both perspective, Vari Energy is my preferable choice.
And I'm assuming in that pecking order, if you had 100 rupees, how much would you allocate to Vari and how much would you allocate to Deepak Builders?
Uh,
Luck
I think
aside.
70 to 80, 70 to Vari and 30 to Deepak. Because chances of allotment will be less in Deepak and chances of allotment will be high in Vari. So definitely 70 to 80% in Vari.
This is sounding like a bit of a game of luck, right? It's almost playing blackjack if nothing else. But okay, so 30% to 30 rupees or 30% to Deepak and 70% to Vari Energies. You've already told me about Hyundai, so I guess we leave it at that. Then Hyundai versus Maruti, you still prefer Maruti even if Hyundai list at 1960, right?
Yes, at that moment, Maruti is a better choice. But again, I'm saying in the longer term, whoever will be launch new product, definitely that will be in a better position. So we really need to see in the longer term.
Yeah, and autos had a tough Asta this quarter, right? Even the festive demand is not seeing the kind of pickup that companies would have liked. I have also one more quick question for you. These are the two exciting IPOs that we're talking about. Anything else that the market participants need to look forward to? Any other big subscriptions that are opening? I'm not talking about NSE and Swiggy because those are still a few months out. Anything next week that we should be watching out for?
I think two more IPOs are opening Godavari Refinery and one Afcon Construction. Apologies if I'm not, I mean, pronouncing it right. But I think these two companies are coming out with the IPO. So I'm really looking forward for those IPOs. I really need to study them. But right now, not in my mind, anything else is coming. So only these two
Right.
IPOs, we really need to see how their fundamentals are.
Right. We'll take up a query, Asa, that has come in, but I'll start with somebody who's written to us, and they're asking you, what does high grey market premium mean for IPOs like in Hyundai?
So, Samina, here I want to say I never comment on gray market premium. So, I will never say anything about it because we never track those things. But only thing which I'm saying that just look after the fundamentals and then make a decision to anyone.
So, also just so that our viewers understand, because now we are using the word grey market premium very frequently. I mean, I refer to this every day when we're looking at an IPO. You just want to tell our viewers what it really means because I think there is a little bit of a confusion. This is not a real traded market in that sense, right? So, just elaborate on what the grey market premium really means and why is it an indication of investors looking to subscribe or looking at a new listing?
Most probably, in my idea, if any IPO comes, then prior to coming on, only it start creating some sort of buzz in the market, and on that basis, might be this concept is coming around. But again, I'm saying look after the fundamentals because fundamental at the end always help, and it rather than anything else.
Is this grey market premium a reliable source of information, Asta?
I don't think so.
No. No, but it's a good indication. I guess people are looking at 100% premium on Vari Energies are probably getting excited anyway. But great talking to you. We'll catch you again soon. Analyze the other two new listings or IPOs that will open next week. But until then, let's see what Hyundai has in store for us tomorrow. Thank you very much.
Thank you. Thank you very much.
With that, we're completely out of time on this show. Thanks for watching.